What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broader market, notably some monthly charts there. We've got our core list of companies that we're always watching, and this week I've got 3 additional trade ideas to share with you towards the end of the video, all based on structure, right? Based on Friday's little bounce, there was plenty of hammer candles and dojis that printed out there, but these 3 structural trades, in my estimation, are worth keeping an eye on. Before we get into it, I would also point out anything we're associated with is linked in the description, be it the Swing Trade newsletter, the Discord, or even the secondary YouTube channel. So check that stuff out. And without further ado, let's jump right into the charts. On the SPY monthly chart, talking about candle structure and location as we always do. Of course, the candle in question is the second one in for the month of November. The structure is bearish, right? This is an inverted hammer. The upper wick would indicate sellers stepped up at the highs, took it back down to the open, and closed it weak all the way down at the lows. Notice that there is no lower wick on this candle structure. So bears take the win from that perspective. However, if we take a look at some prior instances of inverted hammers, so there's 2 back to back, there's one right here, there's one right here, and there's even one here. In most of these instances, the chart has resolved higher, right? And here it was also higher. And this one's kind of an anomaly, noticing that this breakdown was obviously sickness round 1, right? So it's not to say that this inverted hammer has to resolve to the upside, but what it is to say is that just because we've printed one does not automatically mean that the market needs to make a significant move to the downside, say like 200 points, 100 points, whatever. It just doesn't indicate that there's any guarantee of downside activity. This is a perfect segue into location, because what we'll find here is the opposite, right? If you look at this as a low and here's a high, certainly the November bar put in a higher low and a higher high, notably a new all-time high. From a location, standpoint, that checks out as actually being bullish. If we even dissect this a bit further, looking at October's range in terms of thirds, something like this, then what you'll notice is we spent a majority of the November bar outside of range, and when we did come back into range, it was only into like the upper 6th. I wouldn't even feel comfortable saying that we made it all the way to the first, low end of the upper third. So like the upper 6th was the severity of the pullback into range. So hopefully by going through all of this, you can get the sense that it's really not a huge shift in monthly tone. So again, structurally speaking, inverted hammer, bearish. Location standpoint, bullish, new all-time highs, higher lows, only coming back, into the upper third of the prior range. So with 2 pieces of conflicting information, let's go ahead and take a look at trend. This is, ultimately what we care about. If we do something like this, there's a trend line, boom, here's your first touch. November, certainly well above, keeping us in an uptrend. We could do the same exact thing coming down from the low here, swinging it out, boom, there's your contact point, the low end of October. November closed above, keeping us in an uptrend. The December bar has not closed yet, but even still, we're kind of, respecting that support trend line there. The only shift in tone on the monthly, in my estimation, is a breakdown underneath 430. And the reason being is because we had that bullish engulfer, and it's, a clear higher low from the monthly. If we were to do something like this, fine, I would just look at that as a bull flag consolidation area from the monthly perspective. And if we take it out, then we reevaluate to say, okay, are we starting to enter a downtrend? As of right now, that's very speculative speaking. Everything we just looked at points to still remaining in an uptrend. Sure, there are some sellers hanging out at the highs, but from a location standpoint, we're also fairly bullish. Now let's drill down and do the same exact thing from the weekly time frame. So a smaller time frame here. Obviously, in terms of structure, we have a full red-bodied candle closing weak down towards the lows, a little bit of a lower wick indicating there was some buy reaction, but it's not significant enough to read into too much. In terms of location, we're also bearish, right? We have a lower high and a lower low. So the bears go 2 for 2 on the weekly time frame, indicating that maybe there's potential for lower here, especially on the amount of volume that was traded. But as always, let's go back to trend. I'm sure you're sick of these trend lines, but we're going to go ahead and draw them back in because they are driving our market as of right now. Oops, let's try that again. We want to redraw as channel. There we go. And if we could get a click, thank you. And then we'll do a couple of more, right? We sort of, foreshadowed these on the monthly, but here's another support trend line. We haven't talked about this one recently. And we'll also put in this one from the major low down here doing something like this. Now, why am I putting all of these support trend lines on the chart? Well, quite simply put, I'm just sort of getting at the fact that down here is a ton of support from a trend perspective. Now, does it mean it has to hold? It doesn't have to hold, but it would at least be logical to say this is a good spot to be fishing for risk-friendly longs. We've seen a pullback, we're not at all-time highs, and we have 3 support trend lines underneath us providing exactly that, support. So from a longer-term perspective for the investor, I would say it makes sense to sort of start dollar cost averaging into a move at and around this area. If it breaks, fine, you're probably looking for somewhere around here. For the shorter-term trader, could be a swing trader, could be a scalper, doesn't really matter. As we come into this, start to be on the lookout for reversal patterns that start to show themselves. Your entries here, you're looking for higher, and if it doesn't work out, your stop loss goes underneath the support trend line. So to me, it makes sense for both crowds, investors and swing traders, to start thinking about this pullback as a buying opportunity in the marketplace. Let's continue on a little bit lower. Let's go to the daily. Let's talk about tradable levels into the upcoming week and talk a little bit more nuance, okay? So zooming in, what I want to do is compare this, as we did just the other day, to exactly what we had in here. Now, I'm not saying that the market has to gap down, it has to resolve lower here, but what I'm getting at is the volatility has been insane. So because of that, I'm going to say firmly right now that I am not confident in a directional move in the S&Ps. We've had a huge day down, we gapped back up to the open, we moved lower, we had a day up, we had a huge day down. It's all over the place. There's a ton of volatility. I'm not confident. I'm not seeing a huge pattern here. It doesn't seem obvious to me what the direction could potentially be. If you look at the 50 SMA, we've traded back and forth through it a number of times. So let's go ahead and remove this level from the chart. No longer really important. What I want to do in today's video talking about levels is point out areas of importance, right? If we are to move lower, as we discussed, it's all about the support trend line. From there, you will monitor and see if we get any sort of reversal pattern. So it could look like a double bottom, something like this, next higher low, break of a neckline takes you back higher to here. Could look like a number of things. Could be an inverted head and shoulders, something like this. Fine, neckline break takes you back higher. Those are just our 2 favorite patterns. It doesn't have to be that. Could be anything. Could just be a simple daily hammer candle off of the support trend line, takes out the highs and moves back higher. It could be a number of things, but this is the downside area to really pay attention to. Now, here's where it gets interesting. What I want to do is something that we don't often do. Coming over to the options chain, looking at the 5-day options in the S&P. Now, what you'll notice is that the options market's forecasting about a $15 move up or down. If we come back on over to the chart and we take $15 lower than our 50 SMA in the close from Friday, so 453 minus 15, mental math here, 438, would basically bring us to here, the top of this prior gap. It would also coincide with a break of your support trend line. Now, if that happens, then we're definitely going to see a shift in tone, in my estimation, in the marketplace. So this is an all eyes on level to the downside. And just to give you a rough estimate of where it could be coming in, we're looking at about 440, 450. Let's say it's later on in the week. Let's call it 446.50 as well. So about a $2 range, but this general area is a must hold kind of area on the chart. If the options market's right, and it's just going to be a straight shot lower, that would be a significant breakdown of trend in your S&P and kind of raise a bit of a red flag. From there, we would definitely go back to our sectors, look a little bit further at market internals, so on and so forth, and reevaluate, is this just a liquidation break? Are we likely going to snap back? Or is there something bigger going on in the market? So that's the downside. That's what I wanted to make you aware of. If there is any sort of upswing, because again, I'm not entirely confident in direction here, it's all about these 2-day highs, closer to, let's just call it 458.50. And then the major one in my estimation is 462. Now, why is that? Well, we have the double top. Here it is. There's your neckline. So it's important from that aspect. And we also have the fake out day where it was sort of the bull trap, right? We had this big move lower, we gapped up and we held above 462. So if we come back into it, I would expect it to act as a fair amount of resistance. I would look for a big resistance there and see if we can ultimately take it out or not. If we get into it and we start printing inverted hammers, if we start printing, indecision dojis, things that show signs of weakness from the buyers, then maybe you don't chase it long on that move higher and you wait for more confirmation. You wait for that double bottom, that higher low pullback. Could be a number of things, but 462 is my upside level. If we're going to use the same options expected move, add 15 on top of 453.50, let's call it. That brings us closer to 468.50, so somewhere up in here, basically back into the all-time high consolidation. But again, I still feel like there are significant roadblocks in the way, especially at that 462. Before we move along, the last thing that I'll sort of do on this chart is bring out the Fibonacci's, because we've done that in the past as well. I want to keep you up to date here. Notice that the 38.2 did not hold, the 50% did not hold, but the 61.8 we are still above. As we know, the 61.8 is the sort of line in the sand. Generally, candle closes underneath would indicate the higher odds for a 100% retracement, depending on time of week, could coincide with the gap, could coincide with the support trend line. This general area, again, hopefully you can see how important it is from a trend perspective in your S&Ps. Without further ado, let's move along here and get into our QQQ, the NASDAQ. Let's go out to a monthly, do the same sort of top-down approach, a little bit faster this time around. Again, inverted hammer from the monthly perspective. Doesn't guarantee selling, just simply implies that there are sellers hanging out at the highs. We do actually have a green close, so a little bit of relative strength here. If we look at it in terms of location, almost all of the activity was above the prior month's range, so that checks out as being even more bullish as well. Good relative strength here in your tech sectors. In terms of support trend lines, right, you could do the same thing. Boom, here's number one, well above that one. And if we come in from the major low, doing something like this, boom, oops, there's your October touch, still above that one as well. So is the uptrend really violated? Absolutely not here in your QQQ. Let's drill down to the weekly, do the same exact thing. As we know, candle is very similar to what we saw in the S&P, so a bearish breakdown here, a lower high, a lower low, 2 for 2 for the bears. But again, where is your trend? Where is your support trend lines? Let's come in from here, doing something like this. Oops, just sort of splitting the difference. There we go. And let's even redraw that one as channel. So here we go up to the top end, resisting off the top, no big deal. And then we'll come in from the low down here. And there's your swing out touch. Boom. Same sort of deal, right? We are coming into a significant amount of support in your QQQ, but we're much further above the support trend lines than in your S&P. So still good relative strength. The volume would indicate, there is certainly a little bit more sell side activity left in the tank. If, what I'm getting at is this, there was true strength, right? Behind that sell side activity here. It's not like we're going to write it off as a low volume move. Let's drill down to the daily now, do the same thing as what we did in the S&Ps, talk in terms of levels, pattern, what's the direction, so on and so forth. This one is actually a little bit cleaner in my estimation in terms of looking at direction. If you do something like this, we have this head and shoulders. Here's your neckline. We firmly broke down underneath and we're supporting at the 50 SMA. We're supporting at the prior swing high, which we did not do in the S&P. So to me, this is almost like the perfect storm, right? If your S&P catches a little bit of a bounce early on in the upcoming week, then it's very likely that your QQQ supports the 50 SMA and the prior all-time high. If it does not, then we're looking at this head and shoulders to pan out further, likely to here. We know that's a weak area of support only from this, and then it's really all about this level right here where there's big prior resistance, and again, depending on time of week, could start to coincide for super support at the major support trend line, okay? So 370 is that must-hold downside area. Obviously, good relative strength. We're still far above it. I'm not forecasting that it just immediately gets there over the course of a couple of days. Could it? Yes, but based on what we see here, doesn't look like the likely scenario. Instead, to the upside, it's all about the neckline breakdown point here at the 390. If we can get back to it, again, just like in your S&P, start to be on the lookout for potential inverted hammers, indecision dojis, things that would make you question the strength of the buyers and that the sellers are going to firmly remain in control. So 390 is a big inflection point. If we can take it out, as we know, with all of this big volatility, I would look for whipsaws back up into about 400. From there, all-time highs are basically on the table after that, not too far away. So QQQ, big relative strength, but the pattern is a little bit cleaner, suggesting some more bearish activity if we resist at 390 and the SPY cannot get into gear. We talked about pullback levels. Let's go ahead and throw on our fibs just to be consistent here, coming in from the low all the way on up to the high. There we go. And what you'll remember is that this is coinciding with the 50% mark here, as well as your 50 SMA. So that's a thing of beauty, seeing that support. And the 61.8 has not been tested yet either. The one concern here would be that, okay, let's say that the S&P is actually going to be the driver and the QQQ is lagging, right? Then obviously there's further room to fall into this prior shelf, which we talked about, which would technically be underneath the 61.8, indicating it would be very likely, or more likely rather, that we 100% retrace the move. So again, based on everything we're seeing here, not abundantly clear based on direction, a little bit cleaner than what we saw in the S&Ps, but a couple of concerns for both directions. Major numbers to watch out for: 390 to the upside, to the downside, support trendline, and 370, noting that the 61.8 would be violated if that move ultimately does unfold. Let's continue on, do the same exact thing for the IWM. Very, very in-depth video today. Coming in for our monthly, let's actually clean up that drawing set. There we go. Zooming in a bit, this one is the most obvious inverted hammer. I mean, if you look at this thing, huge upper wick, huge body as well, fully engulfing the prior month's range. So obviously structure goes to the bears. Location also goes to the bears. Sure, we got a new higher high, but we closed underneath the prior month, and we're back inside of firmly this overall range. So a fake break from this upper wick. Big concern here on the monthly. If we remain in the flag, fine, but I would say we're looking for the bottom end, and then we will reevaluate at around 208, as we know that's the critical support. Let's go down to the weekly, do what we've been doing. Obviously, this one is bearish as well. Big red-bodied candle, no lower wick on the bottom, 50% of the prior week's range, and underneath, lower high, lower low. It all checks out for a potential continuation move lower. Big volume as well. Let's continue on down to the daily and throw our levels back on. There we go, zooming in a little bit. And again, this one directionally, just like the S&P, more of an I don't know, sort of a question mark in here. You can see the huge whipsaws of volatility back and forth, finding a little bit of support around the 215. But could that just be oversold sort of consolidation down here towards the lows? Could be. In that case, you're looking at a bear flag breakdown of these lows. It's going to be a little bit lower than 215 technically. I would start watching 213. If that goes, it's all about the bottom of the range at 208, and that's the all-important number in IWM, and really for the entire broad market. Remember that IWM is seen as a risk-on, risk-off asset. If small caps are really starting to hurt, that's a bad sign for the potential of the economy here. And a breakdown of 208, big red flag for the entire market in my estimation. So that's your must hold to the downside. If it goes, again, big red flag on any sort of upturn, 222.50. As you can see, that's been your magnet, the midpoint as well of the overall range. So I wouldn't expect any directional activity until we can resolve that either to the upside or, firmly back down to the downside. Looking at this again, if the move is higher in the first place. But again, just like the S&P, direction isn't abundantly clear. Those are just the main levels I would be watching out for. You've made it to this point in the video. I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, and what a relative strength monster here. I mean, making a new all-time high in the face of a fairly aggressive downdraft in the marketplace, and even on the Thursday gap down, right, technically opening here, rally to fill the gap, and on Friday, consolidation in the upper third of this sort of range right in here. So knowing all of that, I'm certainly watching out to see if we can get further consolidation and then a break up and over this 164 quarter, and if that coincides with a bounce in the SPY or a bounce in the QQQ, then fantastic. Look to retarget the highs closer to 170 here in Apple. Great potential for that relative strength bullish setup here if the rest of the market bounces. If the SPY and Qs do not bounce and they just get sideways activity or even move lower, then what you're watching in Apple is how relatively strong does it want to remain? Will it come down into set number 2? And again, I'm just thinking like this. There's 1, 2, and 3. Do we come down into 2 and just get sort of that whipsaw-y, choppy back and forth action, dipping a toe into 1, dipping a toe into 3, going sideways until there's a better directional move in the broad market? That's what I would watch out for in Apple. If there's a firm breakdown, let's say there's some terrible news catalyst that comes out about Apple, remember that we made a new all-time high, and technically speaking, pulling back down into the support trendline for a touch here should give us some sort of bounce. So that's what I would watch out for if there's a bigger downside reaction for some unknown reason as of right now. Let's move along, get into Netflix here. This one honestly didn't fare as well as I thought it would have with the sort of nature of all the headlines and this kind of being the stay-at-home trade. I figured it might have had a chance of staying up in this overall range up here, but I mean, firmly breaking down, right? You could look at this as being a break of the support trend line here. You could look at this as a double top. Here's your neckline breakdown into the end of the week. Just overall, not looking great inside of Netflix, but this does not mean chase it to the downside. Notice that we've had 4 days of straight down and covering a large range, right? We're talking about 80 points, give or take. So I would not chase it. Instead, I would wait to see if we get bear flag consolidation consolidation, so something that would look like this, and then some sort of breakdown underneath this, let's call it 595 for round numbers sake, to get us to the lows here, and then the prior breakout point, this is a really important one, close to 555, we'll call it round numbers sake, and the daily 200 SMA. That's ultimately the downside target if we get that bear flag consolidation. And again, the chart is not looking fantastic, noting that we've broken trend and we're firmly underneath the neckline. The only instance where this chart gets some sort of bounce is if we can get a move up and over the 2-day highs here at 625.67. If that happens, anyone late to the party here to the short side may start to cover and produce a little bit, and I say this word very carefully, a bit of a short squeeze. And all I mean by that is added buying pressure. I'm not saying that it has to do something like this, back up to 700 and beyond. I'm simply saying there will be added buying pressure if we take out those 2-day highs. I would watch for a back test of the neckline from the double top here at and around 640 quarter. Okay, after that, it's all about the daily 50 SMA. If it resolves, you can walk those targets up. But Netflix predominantly looking for bear flag consolidation somewhere around this area. Next up, we have, oops, we skipped one there. We have Tesla. Zooming in on this one, we have this kind of range right here. Obviously, we're at the bottom end. And as you know on the channel, we have opportunity at the bottom or top of any given range. And since we're at the bottom, we have opportunity. Now, because it's been a little bit of time since we've tested this here, from here, I would start to look for a little bit of a dead cat bounce here, noting that anyone who has sort of missed this big run in Tesla is probably looking at this 1,000 mark and just saying, oh, it's the bottom end of the range. There's support here. The daily 50 SMA is here. Could be a big area for buyers to really step up. Now, I don't know that for sure, but if we start holding early on in the session on Monday or something, if we even come in and print a little bit of a hammer candle here eventually, look for the retracement to the neckline of this double top here at and around this 1065. Now, Tesla's an absolute monster. It could easily do that over the course of a day. Could easily do that over the course of a couple of hours, right? So from there, monitor for continuation here, 1105, then the top where that double top actually is at 1160. Those are upside targets if we hold at the bottom end of the range. And in my opinion, based on the overall nature of Tesla and how it trades, I would kind of expect this to hold here. If it does not, and don't come back to the channel and say, hey, it didn't hold, I lost a ton of money. If it does not hold, then I would be patient and wait for this gap fill underneath and potentially the support trend line. That's really the downside area I would pay attention to. Again, keep in mind, what's the QQQ doing? What's the S&P doing? That'll help you make a decision in what will potentially happen here in Tesla. Now let's get into Alibaba. We kind of skipped ahead there. I want to address the delisting kind of issue. If you do own the stock, right, and you're afraid of this delisting thing, I would just point out that it does not mean the stock is going to go to zero. That is not how that works. All it means is that the exchanges are not going to list Alibaba, so you'll have to access it through an OTC exchange. And the implications of that would be that bigger institutions probably don't want to play around with Alibaba if it's going to be delisted, regardless of its sort of financial backing or fundamentals of the company. It's just less attractive, right? But again, it doesn't mean your shares go to zero. Doesn't mean the stock disappears or anything like that. Just harder to access on an over-the-counter exchange. Okay. So those are the concerns. Obviously, that's why the stock is selling off. We're coming into support, right? If I go out to let's go to a weekly, but we have to grab more years here just to show you how long it's been. Breaking down firmly under that over the course of the week, coming into the prior high at the 109.40, and then what I would really pay attention to, not so much this choppy area in the middle around 100, although it is the psychological number. I mean, you can clearly see how this in the past was big resistance in here. We get a break, a retest that holds, and that kind of leads to this run here from late 2016, early 2017. So to me, it's all about 85.50 on any further breakdown. Sure, 100 could be a psychological bump in the road, but ultimately speaking, I need some sort of pattern here to get involved to the long side. Is it a guaranteed short? I wouldn't really go that route either, noting that it's getting kind of extended. If there is any sort of upswing here, if there's any sort of positive news where regulators say, you know what, maybe it's not that big of a deal, then I would expect this to do something like this. Okay, so it's not a guaranteed short, but it is something to look for lower inside of into the remainder of its time, essentially, if it's going to get delisted. Let's continue on here with Facebook. This one's actually bringing up some concerns, noting that we firmly have, here's your highs, lower high, not nearly as strong as Netflix or Tesla or Apple or any of those. And we also now have on the end of week a new lower low. These are all the hallmark signs of a downtrend, which is starting to form. So kind of concerning here in Facebook, the weakest of all the tech, but we do see a little bit of a hammer type candle printing. The lower wick is probably 50% of the entire range here. So you could start to classify that. In terms of upside, if it's going to produce a bounce, just like Netflix, needs to be over the 2-day highs, closer to 314.50. If that happens, look for a retracement into the shoulder line of this sort of inverted head and shoulders, right? That would be here at 323. From there, probably about the moving averages, kind of choppy in here. We know that Facebook hasn't really been the cleanest trader, so I wouldn't really look for a trend to develop there to the upside. Probably chop at that area if it plans out to the upside in the first place. To the downside, if we can't really take out those 2-day highs, again, just like Netflix, I would not chase this short down here. Instead, I would wait for bear flag consolidation, and a break of 300 takes us to our next level at 276 quarter, or half, excuse me. And that's coming from, if I scrunch up the chart and make this a little bit better on your eyes, this area right here. Why is that important? Well, resistance, break, retest, and hold. So that's where we're getting that 276 if there is more downside from some potential daily bear flag in Facebook. As of right now, kind of patience. Again, 2-day high break might be interesting for a move to the shoulder line, but we'll take that as it potentially comes. Next up, we have NVIDIA here, and zooming in, we're looking at a lot of data there. There we go. So here we have two ranges, obviously this one and obviously this one right here. NVIDIA is not bearish in my estimation until it breaks down underneath 287.50. If that happens, then fine. Probably looking at the daily 50 SMA on this chart. But until it actually breaks down underneath there, I would look for potential longs off of the bottom, right? If it's going to continue lower, then maybe we get some sort of double bottoming pattern, break of this neckline takes you higher. Could be a number of things. Technically, we did close underneath these lows here on Friday, but we get a little bit of a lower wick. It's kind of right at it. It's hard to tell whether or not it's a firm breakdown or not. So in NVIDIA, patience. If it does move lower, looking for longs, it would be ideal if the double bottom happens here for a higher set of lows, right? Something like this. Neckline break takes you back to the top end of the range in here. Technically, what we would have would be a look below and fail back into the range. Target's always the top end at 333.50, give or take. So that's my take on NVIDIA. Even if it does break down, again, in terms of range rules, let's double that range to the downside, brings us right to the support point at the 287.50. So either way, however you cut it here in NVIDIA, still looking for opportunities for longs, even if it comes lower. If it breaks back up into range, you have the look below and fail scenario on your hands. Next up, we have Microsoft, and this one's pretty interesting. If you remember in last week's video, I already took it off the chart, which is kind of a shame, but we had this as a potential area of bump in the road, and the same thing for right here. I just wanted to reiterate, why we explicitly called it maybe just a bump in the road and not a significant support. You can easily see how on Friday's session, we just cleanly took that out to the downside. As of right now, downside levels are all about the daily 50 SMA blue line, and then the gap. As of right now, we're supporting at the top end of the gap, which is a bullish sign, of course, but we're still far underneath the head and shoulders kind of neckline breakdown point at the 329 quarter. So right now, patience in Microsoft, not abundantly clear what direction will be in here. If we can move back above the neckline breakdown at the 329 quarter, look for the shoulders at 338. If it's lower, your gap trade is probably the one to pay attention to. Break of the 50 SMA, break of Friday's low, looking at 312.50 as a downside target. From there, reevaluate, right? This big breakout point from in the past should offer some support at 305.50 if we just continue on lower all throughout the course of a day. Next and lastly, let's get on over to Amazon, the beast here. Zooming in a little bit, there we go. This one is also a head and shoulders, right? You could look at this, shoulder, head, shoulder here. This is kind of the neckline, maybe. This was kind of the neckline. Regardless, what I'm getting at here, bearish, right? We did see a bearish breakdown, a bearish move under the 50 SMA, move underneath the support trend line, kind of at it right now. But nonetheless, this chart isn't looking so pretty. If you scrunch it up, we're just trading in the middle of a range, right? If you do something like this, here you go. We tried to resolve the midpoint here on Thursday and early on Friday. Didn't happen, and we're resolving it lower. So if it continues lower, it's all about this level right here, 3,300. And if that breaks, it's about the bottom end of the range at 3,175, we'll call it, just for round numbers' sake, right? So that's the downside case. If it does want to spring back above the support trend line, you still have a fair amount of resistance here, 3,460. And if that goes, that's probably the trade to pay attention to here. If we can recapture this on big momentum, let's say the Qs and the SPY, the broad market's absolutely running hot, boom, you're probably looking at this to 35.85. Now, all over the course of one day, Yeah, maybe actually in Amazon. If you look at some of these trend days here, as well as back here, it certainly has the capacity to do that, especially if we're kind of starting with an open maybe slightly above on a gap up or something. Who knows how it will unfold, but that could be one idea here inside of Amazon. 35.80, anything above, you're back up towards these highs. Not forecasting that, but again, a break here could potentially bring us to here for the earlier part of the week if the broad market is making that move higher. So that's going to wrap up our companies. Let's get into these ideas. Quick reminder to hit the thumbs up button, subscribe to the channel, hit the bell button, all of that stuff YouTube tells us to tell you guys, and let's get right into the ideas. First one's going to be on Walmart, and the reason we have Walmart on the list is not only because, again, from a structural standpoint, we have this very critical support. We do see a bullish candle on Friday's session in the face of a pretty aggressive move lower in the broad market, but also, if you take a look at what's going on in your S&P sectors, let's go ahead and expand that. There we go. We want to drag that higher. The XLP for consumer staples, of which Walmart obviously sells food, it sells, clothing, things of that nature. So these guys were at the top of the list on a bad day, a pretty, nasty day in the broader market. Now, if tech is going to fall out of favor, if people are going to move into more defensive assets, then staples are one of those assets. I mean, among other things, we of course know utilities, generally real estate as well. But overall, this has potential to bounce off of this very historic area of support here to get us potentially into 142 or the daily 200 SMA. So I would look for follow through up and over Friday's high to get us into some of those upper targets. If it never happens, then potentially be patient, wait for a double bottom, some sort of neckline to pan out. Again, that might look something like this over the course of time. Boom, there's your break for higher. And if it doesn't work out, tight risk, right? Stop just goes right underneath here. You're out of the trade for, a small loss or potentially break even depending on your entry point. So Walmart definitely on the top of my watch list for this upcoming week. DELL is up next. And although these guys are tech and it seems like tech's falling out of favor, I mean, again, if you look at this huge relative strength, breaking out on Friday up and over this sort of pressure cooker top, ascending triangle, whatever you want to, call this thing here, new all-time high close. So is there going to be upside follow through? Maybe. It's certainly on my radar for some sort of moves higher if the broad market starts to rally. It just seems like it would be added fuel to the fire for this to continue into blue sky territories. Not interested in the trade if it wants to break back down underneath 57.75. Just let it consolidate further. If it supports at the support trend line, fantastic. Keep it on your radar for a potential break in the future. But if it comes down underneath the 50 SMA, underneath the support trend line, probably off your radar here for DELL. Next and lastly, we have Home Depot. And this one is just a very, very clean, obviously, in the face of an all over the place market, bull flag, right? We didn't really get the traction we wanted to see up and over the resistance trend line on Friday, but if it wants to do it again, fine. Maybe you're just more patient and you wait for the horizontal break up and over these highs. Let's throw that on with some levels here. So that would be, if we take out this 415.60, fine, looking for higher. Blue sky territories here inside of Home Depot. Not interested in the trade if it breaks down underneath the flag lows, closer to 401. And if it consolidates inside, fine, keep it on a watch list, set some alerts. And if it, starts to break out, take action. If not, then let it ride. So those are the three setups that I've got for you today. Hopefully you can see why they made the cut. If you enjoyed today's video or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget that our secondary channel is linked down below in the description along with all of our other resources. And with that being said, I wish you all a green trading week.